You're listening to the Real Returns podcast, where we learn how real investments can make a real impact. Join your hosts, Andrew and Dan, as they share stories and interview business leaders on how real estate and other forms of investment can create meaningful change for individuals and communities around the world.
Hello and welcome back to another episode of the Real Returns podcast. I'm your host, Andrew Reichert, joined with my co-host, Dan Croce. Dan, how we doing over there today?
I'm doing well. Excited to be recording today with our esteemed friend and colleague, Joshua Pollard. Before I introduce him, it's been a crazy week for me. I got back from Africa a week ago today, and then the next day moved. And I tell you what, moving with kids is no joke. The kids running around everywhere. We've been moved for a week, though, and the thing that's complicated, we've been moved for a week, and I still can't remember which box I put the kids in. So
I thought you were going to say the kids keep following you to the new home. That would have been a good one, too.
Yeah.
We moved a week ago, and the kids followed us.
Yeah.
That's good.
My wife, she really wanted me to make sure we had all the kitchen stuff set up in the new place, so she wanted me to get the kitchen utensils. It's I don't want to bother with all those, but I do like a good cake. So I was looking around at the utensils. I was like, you know what? That's a risk I'm willing to take.
Oh, that was bad. That was a dad joke.
Oh,
very,
man.
very bad.
They don't get much worse than that, but you're welcome. You're welcome.
Very punny.
Hey, so we have, as I said, Joshua Pollard on the show today. Joshua is the president and CEO of Omicelo, which is a mission-driven private equity firm. They do invest in real estate, but they also invest in some healthcare and some financial services. So they do a variety of things. Prior to Omicelo, Joshua's background was in housing research at Goldman Sachs. So quite an accomplished individual. Joshua, why don't you introduce yourself to our audience and say a little bit about who you are?
Yeah, thank you for having me. I appreciate you guys. Dan, I didn't know you had such a wonderful repertoire of great dad jokes. I appreciate it. I'm going to step it up. That's first thing you should know about me. I'm going to step up my dad jokes. But it's true what you say, Dan. I do lead a mission-driven private equity firm. We deploy capital into businesses in the real estate, healthcare, and sustainability sectors that make the world a better place. I'm very proud of the work that I get to do. A lot of it germinates from the experiences I've had the pleasure of having it over a short lifetime thus far, including being raised by a family chock full of steelworkers and veterans, which meant a lot of grit and not a lot of nonsense, but also meant that the 1980s, as steel was in its decline in Pittsburgh, Pennsylvania, where I call home, that my family was homeless. I've gotten some very special opportunities, including one of the wealthiest people in Pittsburgh paying for me to go to a private high school for my last 2 years, deciding I wanted to be a doctor until I took my very first chemistry course. I don't think your listeners want to hear the whole story about how I got to Goldman Sachs, but it's a wild one. I've just gotten opportunity after opportunity. The good Lord has been very kind to me, and I'm grateful to be doing work every day that I'm both proud of and can feel really good about. That's me in a small nutshell. And for what it's worth, I've got an amazing wife and 3 really cool kiddos that are 4, 9, and 10, so I get to have a lot of fun when I put the work down.
Yeah, that's awesome. Well, you've got quite an accomplished career. I'm curious to hear a little bit about how you got started from the Goldman Sachs space into kind of investing in real estate. How did you make that jump? What really drove you to make that change as well?
I was at Goldman at a very special time. I was there from 2005 to 2013. So I literally got to see, as they call it, the best of times and the worst of times. 2005 and 6, it was like, what in the world have I got myself into? This is amazing. By 2008, 2009, I'm like, there's no way I'm not getting fired. But what I found is that in those deep, dark times, or actually every time there's been a pretty bad recession or something pretty negative like the great financial crisis, it has ended up being a point of transformation for me. I was 24 when I was asked to lead housing research at Goldman Sachs. And it's pretty funny, the grit that you must have to live off of peanut butter and jelly sandwiches for a very long portion of your early childhood and teenage years sort of helped me make a decision pretty quick while I was at Goldman Sachs. Everybody, the smartest people I knew were getting fired. I didn't think that that I had any hope of staying. And when I looked at my bank accounts at that time, I looked and said, I've got about 7 or 8 years that I could live off of peanut butter and jelly sandwiches. And that was my very astute analysis to get back to work while most folks were frozen. And that created an opportunity where ultimately I got asked to lead housing research. I left Goldman Sachs because I wanted really to be an investor. Goldman Sachs is a big name, and I couldn't think of a better place to start my career. But I was in an advice-giving role to public investors, and more than anything, I wanted to sit in their seat. So I took a year between Goldman and starting Omicelo to go to a hedge fund, just to understand more, to sit in the seat of a decision maker. And I realized 2 things. Number one, I wanted to have both impact and ownership. If you have neither, it's really hard to be as motivated as I am and as passionate as I am and not be able to move the ship at all, even if it's the Titanic. And then the second thing I realized is most of the very wealthy people around me, once they got a little bit older, were having this deep, deep kind of hole almost in their hearts about, yeah, I made some money. Yeah, I put my kids through college, but what good did I achieve in the world? And they were having what I call the right hand, left hand issue. The right hand was chock full of money and their left hand was passing it out as fast as it could get it into its hand now that they've amassed wealth. But their hearts were stuck in the middle. And I realized at that moment that I didn't want to spend my career making money in a way that didn't also feel as good as how I intended to get it out or spend it over time. A lot of that was the sort of philosophical genesis around starting Omicelo.
Yeah.
That you see today.
That's awesome. And I love your thoughts on impact and ownership. I'd love to maybe unpack that a little bit. One of the things I understand that you've done is, I believe you started some kind of a nonprofit, Omicelo Cares. Can you talk about that and how that relates to this concept of impact and ownership?
Yeah, if I could step back from that a second, I'd love to actually talk about how it plays out in the for-profit context,
Yeah.
if you don't mind, Andrew. I mean, what does it really mean to be mission-driven? What does it really mean? To me, to be mission-driven means to be motivated by a greater goal than money, while simultaneously acknowledging the important role of profitability in achieving that greater goal time and time again. To put it more simply, I do believe firmly that being truly mission-driven should result in higher profitability than what is achievable without being mission-driven. I know that rolls right in the face of how most folks tend to think about mission orientation or mission-driven investments or things that are improving the livelihoods of others, that somehow there's a discount that you need to put on your returns to do so. My experience is that the greater goals actually connect the company to each of its partners, its clients, internally, each teammate, more sincerely and firmly than money ever could on a standalone basis. And that stronger connection therefore increases employee morale, employee productivity, and it also ends up being one of the strong sourcing techniques for unique value creating business opportunities. That's really what drives a lot of this. If you can be genuine in your mission orientation, it should indeed lead to higher profitability. And that's how we try to operate our business.
I love that. Yeah, for sure. There's definitely a myth out there that if you are actually mission driven and impact oriented, that you have to give something up on the profit side of things or somehow make bad investments. But I love how you sort of said it's quite the opposite. In fact, your mission driven nature really should lead to increased profits and better performance. That's incredible. And is that how you've seen it play out in the investments you've made? I mean, on the real estate side and the other businesses you're you're investing in? Have you seen that actually tangibly show up?
Yes, and that's not to say that every investment has been perfect, right? But the reality is that we have seen some very real green shoots of opportunities and economics be extremely favorable. We absolutely see it in the management team that we built, and just the lack of turnover of our senior management team. We've seen it in many different opportunities that have come our way, and we quite frankly do believe that the best is still yet to come.
That's awesome. Well, tell me a little bit about your nonprofit. I know you started a nonprofit. We've talked about that a little bit through the years, but for our listeners, can you talk about the mission and what it does?
Yeah, sure. So Omicelo Cares is a 501c3. Its mission is pretty simple. It is to support existing community members in low to moderate income neighborhoods to raise their incomes, increase their financial assets, and grow their small businesses. One of the simple premises of the work was to really try and help the community members in the same areas where we are ultimately invested. There are many, many, many ways to do so. And our creation of a nonprofit was the first of those. And I'm so proud of the work. I mean, I'll give you a couple of the early statistics. Just in the Pittsburgh area, we've been able to teach over 250 community members how to invest in real estate themselves. They have gone through the programs, including the Real Estate Co-Empowerment Series, which is focused on real estate, the Landlord Experience, which is focused on being a really astute, fair, and balanced landlord, program called Equity Up, where they're learning the stock market. Those 200 plus community members have already transacted on well in excess of 100 pieces of real estate themselves. And for everyone who thinks that, moderate income folks can't be successful in making investment decisions, what Omicelo Cares has been able to do over the last few years really just flies in the face of that. It is a powerful testament, in my opinion, to one of many ways that you can have impact positively in communities while investing.
I love that, Joshua. That is so unique and so powerful. I mean, what better way to impact the lives of the community members of where you're investing than to actually equip them to improve their own lives. So that's amazing. Can you talk in sort of the core business of Omicelo? How do you think about making investment decisions? So you have real estate investments, so direct real estate investments, but then you're also in the healthcare space. So what is kind of your driving force behind, whether you're going to zig or zag with the next incremental dollar that you're looking to deploy?
Yeah, that's a great question. So first, I'll talk to how we think about investing and sort of really our investment approach. And then I'll talk a little bit about some of the portfolio companies that we are either engaged with or flirting with. Our idea is to maintain a tight-knit portfolio of investments in the lower middle market space within, again, those same three sectors that we've discussed: real estate, healthcare, and sustainability. We know that focus and execution lead to the best results, and we have a serious disdain for mediocrity. So we recognize as well that if we try to over diversify, that we're ultimately diversifying to medium. So again, tight knit portfolio, just a few companies. We in those companies take a very active role and a very active advisory role, and we invest in optimizing efficiency, facilitating previously untapped value creation. And really the goal is to multiply both the financial success of these companies and the broader impact. So from a size perspective, we're looking to invest in companies that generate anywhere between $5 and $50 million in sales. They're US headquartered. Again, they're in real estate, healthcare, sustainability, and they have a few what I would call defining characteristics. I'll put it in 4 buckets. Number one, they have the potential to become a leading company within a niche of our focus sector. Number two, they already have a high-performing management team or a management team that can be augmented by Omicelo. Number three, it's really important that there's a corporate culture already that is mission-friendly. Because oftentimes when we're being introduced to companies, the founder is starving for the opportunity to be mission-driven, but just don't know how. And that's very important to them. And then last, and as important as the others, we need to see clear and actionable catalysts to grow the business materially. When we identify companies that fit that mold, we're on it. But as you can, I hope you can tell, that surely isn't every company. And so it allows us to be selective. We think a lot about opportunity costs. If I spend 1 hour with this company, I can't spend it with another. So the bar is pretty high. Just to talk a little bit about some of our investments, we no longer invest directly in real estate, but we are very focused in one of our portfolio companies on private credit, where we're offering senior and mezzanine financing to the real estate sector. In another company, we're almost through the finish line with, I'm hopeful that all goes well. Our goal is to provide sustainability services to the healthcare sector. We're pretty jazzed about that opportunity. In another portfolio company, we're providing home modifications so that folks can age in place and create as much value out of their homes by not having to go to assisted living and senior care facilities. If you think about these three portfolio companies that I just mentioned, we're talking about very sizable total addressable markets, long-term characteristics that aren't going to get completely upended by a regular recession. Things that we can really win long-term and feel great about the work that we're doing in the world.
Yeah, I love that. If any listeners are coming across companies that match those characteristics, can you just talk a little bit about your process? Like what does it look like to vet one of those companies? Are you like, what does due diligence look like for you guys? How do you identify that, they're sort of checking those boxes you talked about?
Yeah, so we use a framework that I created a few years ago with a really, really good friend of mine who went to Kellogg. And it's funny, when you have real friends in business, you realize like you start to call them by whatever big high profile brand they're associated with. But this really was like my friend who I used to go out and party with on Thursday nights. But yeah, she went to Kellogg and worked for all of these great brands. But we created something called the 7 Pillars. And it really helped me when I was working at a hedge fund. What would happen is the bell would close at 4. An already public company would issue a secondary at 4:01. For any listeners who are not familiar with all of the jargon, if you're a publicly traded company and you want to issue more shares than what are currently outstanding, you do a secondary public offering, which is the second step to doing an initial public offering, which is an IPO. So these companies will come out with a secondary at 4:01, and guess what time the books close? 4:30. So it's a company in a sector that I understand and that I know enough to be a little bit dangerous, but I got 29 minutes to figure out whether or not I want to be invested. Now, the way these deals work is that the company, depending on how the books field and the requests that come in, would determine how much a discount off of a closing price that day that secondary would price. So if it priced at a major discount, that means there weren't a lot of people who really wanted the offering. So you feel kind of bad, but you're a little happy because you got a discount. If it priced really tight, you're like, oh, there wasn't a ton of value here. The worst thing you could do is get it wrong. Get it wrong because you went in and you shouldn't have, or you should have, and you didn't. As you can imagine, it was a tense scenario, which is why folks are always leery about working at hedge funds. But I needed a framework to look at a company in 29 minutes and assess whether or not it was a good investment. And it turns out that same framework turned out to be really incredible for businesses of all kinds. The 7 pillars of sustainable business are strategy, technology, communication, finance, legal, capital, and people. If any one of those pillars is flawed, the business is wholly unlikely to succeed through stress, whether that stress be internal stress or macro stress, you name it. So we're always looking through that lens of saying, number one, you have to have the bookends. You have to have the bookends. You must have good strategy and good people. There's nothing much that we can do if you got a bad strategy and bad people. Right? If you can have both of those in a great way, there tend to be fixes for most of the other things. If you're a health tech company and you got bad technology, that's that's pretty hard to get over. So we're always looking for that lens. When we can find a company that's got 4 or 5 really strong pillars, and the 2 pillars that need strengthening are within our bailiwick and within our wheelhouse to augment and be successful in, and therefore we're able to add significant value. That's where we dig in. So we use the 7 pillars as our due diligence framework. It's worked wonders for us.
Yeah, I love it. You talked a little bit about sustainability. I know earlier you talked about investing in sustainability companies as well. When you say sustainability, that can mean different things to different people. Some folks think of environmental sustainability, or maybe a company that is sustainable, going to last for a long time. How do you think of the term sustainable?
I think of it both, and Andrew, great question. For your listeners, we didn't plan that question. I love that question. There is nothing more unsustainable than being what folks refer to as green, but it doesn't make financial sense. Or being currently financially sustainable, but you're pumping off gases that are ultimately going to cost you significant sums because of just the wave of regulation that's coming from most corners of the earth. And so what we focus our attention on investments in companies that are able to meet both. And that's the most important, I would say, differentiation on the strategy side when we're looking at the 7 pillars for sustainability focused companies. There are many, and I mean many, sustainability companies that are popping up where their thesis is that to reach net zero by 2050, there's going to have to be significant increase in spending, and they want their piece. And so their answer is, we're just going to be a consultant, irrespective of whether or not our fees are sustainable to the customer, whether or not they're creating enough value for their fees to be sustainable to the customer, and if it's actually going to create both financial stability, sustainability, alongside energy sustainability for the client or customer. This gets right back to the 7 pillars in strategy. We can't have one without the other. I didn't mention this earlier, but I do write for Forbes. And one of the things I found, I was writing an article about ESG. And as you guys know, ESG can be very much a lightning rod topic for investors. And it was an eye-opening article, and one of my friends pointed out to me something that I wrote in that article. And even though I ultimately authored it, I didn't really embrace it until someone pushed it back at me. And it said, the fact is, many business leaders are environmentally conscious, but will never be climate change activists. Many, or even most, are committed to treating people with equality and human dignity, but will never embrace the critical theory arguments at the center of today's political stage. Many desire sound corporate governance, but are suspicious of overregulation, including excessive reporting burdens that sap innovation, fueling manpower and profits. When you put that in context, Andrew and Dan, it's got to make sense both ways. When we find businesses that can make it make sense both ways, that's where you start from the right place, from the strategy. You generally get that type of strategy from the type of people you want to be invested behind, And so you start to try to decipher whether or not the other 5 pillars make sense.
Awesome. Well, Joshua, I learned so much. Those pillars it's a fascinating concept. And frankly, I think I have to thank you because now Andrew and I know what's the matter with Burgo. We have bad strategy and bad people. He and I are the bad people.
Yeah, that's right. Definitely two bad people.
Yeah, just these two. Yeah. No, I'm kidding. But honestly, that is a fascinating framework and makes a lot of sense that is kind of the lens through which you evaluate your potential investments. But with that, I think we're heading here towards the end of our time. And so I wanted to get a little sense from you on some fun questions, get to know you personally a little bit. So our lightning round. First up, what would you say is personal or professional, whichever direction you want to take it, what is your biggest win?
Marrying Ashley Pollard.
It's good.
Full stop.
We'll have to send this to her.
No hesitation. He knew the right answer immediately. Awesome. I have to meet her at some point. Favorite movie?
I don't mean to be so stumped. There's so many good ones. I'm going to go with The Shack.
Oh, that is a good one. Yeah, good choice.
I cried so much at the end of that one.
It's been a while since I've seen that. That's a good one.
It's a good one.
Yeah. Great choice. What's your favorite food?
Yesterday I made something for the first time and it was amazing. I had hummus, pepper, beet noodles, and goat cheese. It was phenomenal.
Wow.
It's my own
All mixed
concoction.
together, or
Oh my gosh, it's so good. Literally, it's like just a little like tablespoon. Then you got a little bit of the beets were noodle. They were peppered, and then a little goat cheese. I mean, it is phenomenal.
Wow. You do a lot of cooking?
I love cooking.
That's great. What is a growth edge of yours? What's a way in which you're trying to improve, either personally or at Omicelo? How are you trying to grow?
Yeah, I am very focused on governance structures through my study of ESG. Like the E is like, all right, get environmentally. I feel like a lot of the social pieces I get, but I'm just getting a framework around. But governance and the very best governance structures is very, very important to me. And I told my team at the beginning of, just recently, I said, hey, we're going to hit our 10-year anniversary in July of 2024. I want us to be able to self-rate ourselves as absolutely excellent in terms of all of our governance structures, and I'm uncovering different ways to get after it.
That's great. It's not necessarily the most fun thing in the world, but man, is it important, and it's a good thing to be putting time and energy into.
yeah.
So how about some A+ content that you're taking in these days? Either book, podcast, any blogs, other than Joshua Pollard's contributions to Forbes. What's some of the best stuff?
That's pretty funny. With my church, have been reading the New Testament 5 chapters a week. And right now I'm in the book of Ephesians, and boy, oh boy, is it life-giving. There's a ton to unpack in there, but boy, the book of Ephesians.
That's awesome. Well, thank you so much, Joshua. I learned a lot today. It was a very engaging conversation, a lot to take away and think about from here. How can our audience keep up with you or get connected to you in the future?
Yeah, absolutely. My favorite social media platform is LinkedIn. I believe it's LinkedIn/Joshua Pollard. It gets pretty simple. You can check us out at Omicelo.com. That's O as in octagon, M as in Mary, I as in indigo, C as in Christ, E as in elephant, L as in love, O as in octagon.com. Would love to meet folks from you all's network. And before we go, I just want to say thank you for having me. I appreciate the opportunity to share both my story and the Omicelo investment approach with you all and with your audience.
Yeah. Thank you so much, Joshua. Appreciate having you on the show. Thanks to our listeners for listening in. I know I was impacted by Joshua's story and also just how he thinks of both impact and ownership together, and how he's lived that out in various ways, both in the for-profit sector and the nonprofit sector. I love the 7 pillars. I'll have to remember those as I think about our business. I would encourage other businesses to think of those as they think of their businesses as well. Thanks again for being on the show. We'll talk to you all next time.
Thank you for joining us for this episode of the Real Returns Podcast. We hope that you learned something new about how you can invest to make a lasting impact on those around you. Please be sure to subscribe to our show wherever you listen to your podcasts, leave us a review, and share about us on social media. We hope you will join us for our next episode, where we will be continuing the conversation around impactful real estate investing.